With massive layoffs in nearly every sector, weakness in manufacturing, car sales, and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good, which might explain why so many billionaires are loading up on gold, including hedge fund manager John Paulson and real estate mogul Sam Zell. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone, reporting from Zurich, Switzerland, here at the Swiss Mining Institute. Joining me now is keynote speaker Claude Béget of the Swiss Gold Letter. Claude, it's our yearly reunion. I'm so happy to be with you in this absolutely remarkable city.
Yeah, and this time we're outside in front of a fantastic view of all Zurich.
I had to add a scarf.
I wish all your viewers could see the wonderful
it's spectacular
panorama.
But, spectacular panorama. But as we know, no shortage of drama amongst the Credit Suisse UBS story here as it continues to unfold. Before we talk the mining space, which obviously you're an expert on, just quick thoughts on the bank runs we're seeing.
Yeah, well, it's very unfortunate because Credit Suisse was a fantastic, brand image. It was the image of security and everything. So now, this big empire is down. It's really too bad. Unfortunately, bankers seem to have this history of doing things totally wrong every 15 years. So one time it's the Latin American debt scandal. The other time it's the mortgage back. So that's why I prefer, people who build companies, good CEOs who create wealth, or good fund managers who create wealth for their customers.
But Claude, offline, we were looking at the returns of the junior mining space. And the big question is, looking at the numbers, how do we attract investors back in the space? Because why would you want to be in it with so much volatility?
Yeah, I'm wondering sometimes why I am in it. And so deep. Look, we've had what you can call 6 super massive black holes, the one after the other. Since 2011, you had a total collapse until 2015, where the GDX was down 90%. And then you had a 48% drawdown, and then a 31%, and then a 30%, and then a 58% drawdown. And 2 years later, another times 50%. So
it's a black hole.
Just to tell you how I feel.
Trying to ease your pain.
So what do you do now? The reason now I'm getting a new spout of energy is that when you have banks starting to fail, it's probably a good time to be back into gold.
Well, we're seeing a rush, especially into physical gold. Folks moving money that they had into the bank, looking, where should I be parking it? So let's talk about your portfolio. I mean, how much is it mixed between miners, physical gold, cash? Can you give us some insights?
Well, you should not do what I'm doing because I'm young. I have no idea of money management.
You're irresponsibly long gold, as I like to say.
Exactly. So I do own 10% is physical gold, of course, but I think people should have more than that. Yeah. And I'm massively in the junior gold space because I like to buy things when they're very cheap, so I'm biased. And gold miners are undervalued versus gold. Mid caps are very undervalued versus gold. And the small caps, you're in an area of total dislocation. So you have fantastic opportunities.
Okay, and before we talk those opportunities, let me ask you this, because a criticism of especially the majors is, well, they don't own gold on their balance sheets. Should they?
Yes, why not? I mean, if they're investing in gold, if they're digging gold, if they're exploring for gold, is that they're bullish gold, right? So to have gold in their portfolio instead of, part of gold instead of cash would be a good idea.
So talk to us a little bit about some companies. I mean, this is what the guys want to hear at home, the folks want to hear, companies that you think have a big upside here.
Yeah, well, first of all, maybe for your viewers, it would be, before speaking of specific companies, maybe the best advice so that you're diversified and you don't take too much risk on one or two companies is to buy a fund. For example, Crescat has the best performing fund in the gold space. So that's a simple thing to do. Here in Switzerland, there's Erich Meyer.
So sorry, for someone who's maybe new to the space, doesn't know where to start, you like the fun route.
Yeah, exactly, because you're automatically diversified, so it'll avoid some of the mistakes I might do or you might do. So Crescat is a very good idea. The other one in Switzerland, Erich Meyer, he runs a large cap fund which is called Gold 2000 or Conwave, and he has an interesting one which is Gold 3000, which is specialized in small caps. Now, after a market route, and that works for any market, if you buy a small cap fund by a good money manager and play the cycle, you have phenomenal returns. And I've seen that in all markets, in the US, in Brazil, and everywhere. So that's an easy way to do it.
Okay. And in terms of any specific companies that you're liking, can you share some insights?
Okay, so here, if we're talking companies, you have to find an edge, okay? Because how can your viewers or myself, how can I compete with the best analysts who cover, very well the big caps, Barrick or this or that? So you have to find an edge, or else, why invest? You just buy the index. I think now we're going into more of a stock picking era.
Yes. Okay. It's interesting you say that, because I just had someone on who said that we might be reverting back. It was Jim Bianco of Bianco Research, that we're probably going to be reverting back to a Peter Lynch era of you can't just get an ETF. You're going to have to pick specific stocks to have success. And as we all know, that involves a lot more homework.
Right, absolutely. And as a private investor, or even as an institution, you have to find your edge.
Yeah.
Okay. So one edge can be psychological. So for example, there has been a major trauma about in the analyst communities, because there's been huge cost overruns. There's been the Coty disaster. There's inflation increasing costs. I mean, the average total cost of gold mining was $1,000 not too long ago, a couple of years ago. Now it's $1,400. The analysts got it wrong. So they're now traumatized.
Right.
So what does that mean? That means an opportunity for us, because they are penalizing growth. In other terms, normally a growth company is always selling for higher multiples than a normal company. And now it's the reverse. So one of the strategies is to buy growth companies at a discount. So one example is Equinox Gold. It's a terrific company. It's a Ross Beatty share.
And you own shares in this, so
yes,
full disclosure, right?
And then the production is 520,000 ounces. They're pretty diversified. With what they have in their company, they can probably get to 1 million ounces. So you have growth, but you're paying price to NAV something like 0.5. Other seniors can go up to 1.2. So you're going to have the re-rating by the growth and a re-rating by the multiple on the company. So that's one way to. So in the same type of idea, because we're still in the nascent bull market, and who knows what can happen, right? So I would say it's better to keep with legendary investors, who play a cycle. In fact, it's a pretty good sign to see that people like Ross Beatty and Frank Giustra are now entering the market for what they believe is a big bull cycle.
And let's talk about how bullish you are on gold, because obviously you're looking at this from a macro perspective. I mean, how much are you tracking what the Fed's doing, what the U.S. dollar is doing? I mean, where do you see gold headed?
Look, it's always impossible to give timing and to give a number, but I would say gold has now broken out. The technicals are good. We're now flirting with $2,000. I think this will break.
By the time we air, who knows?
And
Yep.
and we could easily reach $2,500 because it's only it's 25% higher.
So I guess just final thoughts for viewers at home. You gave a resounding presentation; everyone loved it. But how do you navigate these times? What's your advice here?
Well, look, stick with people who've made a lot of money. So Frank Giustra, he has this new vehicle called Aris Mining, symbol is ARIS. He knows how to play the cycle, and he already has a big base. He has something like 15 million ounces of gold measured and indicated. The market cap is something around 500 million. He wants to buy and build. And he's also doing that on two smaller companies that I could mention because there, of course, the potential could be much higher. It's more risky. So the more risky, the more you have to have confidence on the management. Since it's Frank Giustra behind, I'm comfortable. So, for example, BlackRock Copper and Gold, 56 million shares outstanding, $12 million market cap. They just raised $7.5 million. But out of that, nearly half was taken by Frank Giustra. So today, if you buy Black Wolf Copper and Gold, you're entering at the same price as an insider.
Right.
That's pretty unusual. Ballpark people say, well, if you get into a situation that is good at less than 3 times what the insiders paid, that's pretty good. Here, you're buying at the same price, and the same would go for West Red Lake, where you're backstop in terms of market cap. They have $25 million market cap, but they already have 820,000 ounces of gold. So you're backstopped by that, and on top of that, they'll do drilling. The exploration potential is huge, and they will consolidate the whole district. Frank Giustra's vision is to create something that might be 5 million ounces. It'll take time. There'll be volatility, but your upside is huge.
And I have an interview coming up with Frank Giustra, so be sure to stay tuned for that. But I guess, Claude, you've been covering this sector for a long time, like I have. How would you sum up this moment in time in this sector? Have you gone through it before? Is it different? How does it feel like to you?
I'm fully invested and I don't feel comfortable. It's a good sign.
Oh, okay. Well, there you go. Claude Bichet, it's always a pleasure catching up with you. Thank you so much.
Thank you, Daniela.
And thank you for watching. We'll have much more incredible content coming your way, so be sure to stay tuned to the Daniela Cambone Show here on Stansberry Research as we're freezing. Let's get inside and get warm. And sign up at danielacambone.com to stay on top of it all. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.